You know, you've heard me say this a million times. We are a standards-based trade association. Very few people actually ask me, what the hell does that mean? We're a standards-based trade association. Well, I am very, very excited to bring up our next panel. These are the folks who we work with, and I see her coming up already. Sima, it's amazing to see you, led by Alex Johnson, who's going to be moderating this panel. These are the folks who we're working with literally day in, day out to think through what are those standards that we're looking for, what are those standards that we're trying to build. How are we as an organization and as an industry going to define ourselves long before we get in any trouble? And so excited to bring up the next panel. Come on up, everybody.
I am delighted to get the opportunity to moderate this discussion. Jason was so excited that he was already out there pitching standards out in the hallway. Sima
needed water.
Yeah, well, and Sima was very late to getting mic'd up, but we figured if we just said standards 3 times, she'd appear like Beetlejuice. So we are going to have a great discussion about standards. I think a theme for really the whole day, starting with Mr. McKernan in the morning, was this discussion around over the next couple of years when we're in a let's call it a looser regulatory environment, the importance of having standards and holding ourselves to a higher standard. So we're going to talk about what that looks like. Anyone who knows my 4 panelists knows I have to use every ounce of time very judiciously. So rather than letting them introduce themselves, where they might take a couple extra seconds, I am going to introduce them very quickly, and then we're going to get into the 3 core questions I have for these folks on standards. So starting on my right, we have Jason Henrichs, who you heard already, CEO of Alloy Labs. We have Melissa Koide, CEO of FinRegLab. 2 labs in a row there. We have Brandon Milhorn, President and CEO of the Conference of State Bank Supervisors. And last but not least, we have Sima Gandhi, co-founder of the Coalition for Financial Ecosystem Standards. Did I get that right? Okay. All right, so the discussion that I want to have is really built around 3 core questions. Why do we need standards? Why don't we already have standards? And how do we solve for the challenges around creating and sustaining standards in this industry? So I would like each of our panelists to answer all 3 of those questions. We're going to go 1 question at a time. And Sima, I'll let you start and we'll work our way down. Question 1, why do we need standards?
I think we're at a unique time within financial services now. Technology is a bigger part of financial services than it ever has been before, and it's only going to increase. Stablecoins, AI, who knows what, robots, whatever, right? And the pace at which technology moves means that our traditional regulatory system, where we set macro guidelines through guidance, doesn't keep up. And so then we end up with a regulation by enforcement type of climate because there's not enough clarity in terms of how you operationalize this guidance. Standard solves that. Like, I think you need a public-private partnership where operators who are in it and who understand what it means to translate them can partner with the government to lay out clear standards by which they're tying themselves to the mast and get certified against that. Because today, with our regulatory system, we're not staffed up to handle that. They can't keep up. And why do we expect them to? Industry needs to do more, and standards help solve that.
Excellent. That was very concise, too. Thank you. Brandon.
Am I ruining our reputation? Yeah.
I think that's a
No. That end of the panel, like fast, concise. I know you guys.
So I will say trust. Trust is why we need standards. You know, when you screw in that light bulb at the house and you see that UL on that bulb, you know that complies with the standard. When you go and buy your refrigerator or your washer and dryer and there's an Energy Star on it, that's a standard. Those were developed by the private sector working with the public sector, but the trust is the key component there. And it's a trust that we're missing right now. For so long, the regulators have told industry, you can innovate, but you better be really, really careful. And they gave 90-page guides on how to be careful, with appendices on how to be very careful. And then they issued 16 enforcement actions that said, if you're not careful, here's what's coming. So who wants to innovate under that framework? Standards help build trust between regulators and their financial institutions, between financial institutions and their partners, between customers and the fintechs and banks that rely on those standards. To me, that is the critical component of why we need standards in this space, combined with Sima's response. Regulators can't keep up. They can't keep up with technology. And my background, before I was at the FDIC with Chairman McWilliams, long before I was at CSPS with our state supervisors, I worked in Homeland Security. And we used public-private partnerships to build standards for port security, for airport screening. All those tools helped move technology and standards into the marketplace faster than if we just regulated. So that trust, to me, is the component that we're missing and why standards are so critical.
That makes a lot of sense. And you touched on something we'll circle back to on who standards are for in terms of signaling to regulators, signaling to partners or counterparties, signaling to end customers. I think that's a really, really good point. Melissa, what do you want to add?
Yeah, I agree with all that, and I would add on that this is critical for competition. Many of us, just to make this really concrete, have been thinking about the value of consumer data for over a decade, and the fact that we don't necessarily have consistency around what data flows, which APIs, who's legitimate, who's not, who owns responsibility. This is obviously adding on to standards, but it means that we then have real challenges in terms of innovators in the room being able to access things like the data to build the innovative products ultimately for consumers. That's just one area that's been lingering for over a decade. We think about the world of agentic AI, we think about APIs, you know, the ability for interoperability. That's not going to happen until we have more consistency within the industry. And then a forewarning, we do have a more lax regulatory environment right now. That's not going to last forever. How is industry partnering with others really going to get some concreteness around how they're doing things appropriately, responsibly, you know, pipes connecting, data flowing, and in a way that ultimately is showing that they are doing good by consumers. So when the CFPB likely does come back, there's actually good work that's been done.
Yeah, that was something that was, again, emphasized throughout the morning so far, has been just like, I know we're in this moment where you can maybe get away with more, but we're building for the next moment where that's not necessarily going to be true. And to that point, I think people really struggle with the idea of investing countercyclically, like investing for a thing you will need, even though you don't need it right now. And I think standards are a great example of that. Jason, from your perspective.
So where do standards tend to work well? In stable industries where certain combinations of inputs used in combination yield a very standard output, consistency that gives you trust. Do you know what is not very stable right now? Fintech innovation and banking. We can't even agree on the terminology, let alone the standards of this. Acting Chair Hill just said fintech, third-party relationships. He really was saying banking as a service or partnership banking. We can't even agree on that.
Yeah,
now,
BAS is out now. We don't say BAS
BAS is
anymore.
out. We don't say that. It's a partnership banking now.
Or embedded finance. We
And
say
I
that
would
still.
love the idea of standards, but I care more about the achievability of how do we actually go about this? What are we trying to accomplish? If it really is, how do we ensure this trust? We actually need to use a finer tooth comb than what you can get in standards. Because if you look at everything from a recently financed, may have raised $100 million doing something on stablecoin with a bank that has never been in it, to the other end of the bank fintech partnership where the bank is actually using a digital vendor to serve its own customers, maybe even doing digital account opening, which is crazy. It's very risky, Alex. I'm not sure if you're aware of that.
Yeah.
But for some banks, that is what their third-party relationship is. We can't even get the terminology consistent. We throw it all in this blanket of third-party relationships. And so I think if we're going to approach standards, we need to actually start with something that's achievable, which is let's get the terms consistent. Let's get the approach consistent. But we can't actually go achieve standards in one fell swoop.
Can I jump in now? Are we allowed to converse now? You wanted us to
No, you
talk
can't
at each
converse.
other.
Yes, go ahead. Jump in.
This is
jump in.
entertaining. Okay, so I agree with Jason that there's a lot of terminology gaps, and that's part of what makes this complicated. It's like, TPRM, but vendor management and third, party and fourth party, and where does it end? And I think that's why we need to actually come together, public-private, and define this and get to that fine-tooth gap. Today we released our lending standards. About 60 pages of very specific operationalized guidance, because I think it's ridiculous to expect regulators on their notice and comment period cycles to be able to articulate with the detail in a way that makes sense with technology. By the time they release something, we've moved on to the next thing already. It just, you can't keep up. And so I think part of getting to that level of detail is by actually starting to do the standards and get the certifications. And you draw an important point, which is we don't need more guidelines. We don't need more best practices. We need audit-ready standards that you can actually get certified against, just like you would with an examiner, but instead of an examiner, it's someone who's steeped in this stuff, so that we're focused on the substance instead of the form, right? Fintech partner banking can be through a middleware, it can be through direct. I don't really care, it's about the substance. And so the standards can extrapolate away that complexity to focus on the substance. And we as industry, all of the people in this room who are in it day in and day out, need a mechanism by which to communicate with the regulators clearly. So not just having those one-off conversations trying to educate them in each of the regional offices. Like, we're never gonna win that game. And so standards, to me, are the way of bridging those differences and creating a mechanism by which we can engage constructively on a more real-time basis than what exists today.
So why don't we have that already?
Oh, this is question number 2.
This is question number 2. Yeah,
great.
so
I'm
like you
helping
guys all
you.
just made a really strong pitch for we should have standards. Wow, that would be amazing. Everything you just described sounds incredible. I would
did
love
not pitch standards.
to have that. No, so I know you didn't. And maybe, Melissa, I'm gonna actually jump to you first on this one. Like, what's standing in the way of making this happen? Why don't we already have standards for everything we've just talked about?
That's a good question. I do think it is coming back in many respects to the competition and the uncertainty of where is the money to be made in terms of what are the products, what are the services that are offered, how do we have confidence from the regulators, these regulators, former regulators, that the non-banks are going to be, you know, on par from a safety and soundness standpoint to a consumer protection standpoint. I do think industry-led standards around the technology is important, but yet I do think policymakers worry that if there aren't a more level playing field, that even with standards, it's problematic. And so you then in industry itself continue to see this competition between the banks and the non-banks. So I think movement both on some of the policy directions and even some of the new charters and licensing may be helpful in that regard by bringing more people in, more entities in, and at the same time trying to move industry to engage with, you know, the banks and the non-banks around the specifics around standards would be important to do.
Yeah, that makes sense. And to the point about competition, and Sima, maybe you can jump in here next. It feels like one of the challenges is folks who don't need standards might view it as like either not a priority or maybe like we have a competitive advantage because we already have a certain level of trust, whereas companies that need standards in order to establish trust or establish credibility, so there's kind of a self-selection problem to a degree, I think, especially when you're starting an effort to create standards. What would you add on to Melissa's sort of conversation around the problems with creating standards or the challenges?
Yeah, I think there's 2 parts to this question, right? Like, who is incentivized to have them? And to that, correct. Like, the banks that have gone through the consent order process and are now at more mature fintech programs don't need them as much because they've made those investments. But if we talk about a level playing field and we talk about protecting community banks and we talk about keeping a diversified banking community within this country, then we need standards, because the cost absorption for a smaller bank to build up these programs and do it in the right way is almost prohibitive at this point. And so standards help give them a roadmap for what they need to do. It doesn't mean that they get an easy pass. It just reduces the barrier to competition in a way that's fair. Like, you shouldn't have to go spend millions and millions of dollars recreating the same thing that the other bank did. So I think there is an incentive mismatch here, and this is where it's a public-private partnership. Like, regulators can help say standards help solve this, and we encourage you to coordinate. And there's actually in 2023, FFIEC interagency guidance says we encourage the shared cost of these diligence, but no one's capitalized off that. I want to go back to why standards don't exist today. Yeah. Dodd-Frank, right? That was what, 2010, 2011? 10. Melissa knows. And you know, I think the financial services industry put ourselves in a very tight, bad spot. And so we were kind of punished for the last decade, right? And I think at the same time, technology has really put pressure on some of the traditional ways of financial services. So maybe we haven't needed them as much as we need them now, Brandon can speak to, they saw a need for this, so it's not like we, are the original thinkers. They've started this. But I just think that there's just more and more pressure. We have less regulatory capacity. Technology is moving faster. We have more innovation. How do you keep up with that, right? Standards are, from my perspective, the only way we do this.
Yeah, Brandon, you guys have been engaged in this effort, as Sima said, for a long time. Illustrate the challenges for us.
Yeah, I think of onboarding. If you're a bank, right, and you want to onboard a partner with a new technology, you've got multiple moving targets that you've got to hit. You've got regulatory expectations that keep moving back and forth and aren't necessarily clear. You've got every bank with a little bit different business model, a little bit different due diligence process, a little bit different questionnaire about how you get onboarded. And if you're a fintech, you've got to hit both of those targets at the same time. This is where standards can come into play, not because we're alleviating compliance requirements. Banks are still on the hook. Banks still have to meet their compliance obligations, even with standards. But it's setting the framework of trust that's so critical and where standards can help. So if regulators are at the table and they're helping craft these standards for onboarding, for KYC, for lending, for model risk management, think of all the areas where you all have questions, real world operational questions that you'd like to bring in a fintech partner for, particularly at community banks that just don't have the staffing or the technology budgets to fix this problem. If regulators are at the table helping form those standards, not only are you addressing a risk for the institution, a compliance risk for the institution, you're giving fintechs a direction to code. You're no longer coding to a moving target. You're coding to a standard. And you don't have to mandate this. See, I think this is where regulators, at least Washington, D.C., my experience in the financial services space is, regulators feel like they need to be hands-off. And our way of talking to the community is by regulating. Well, and imposing requirements that you have to meet. And if you don't, then over to you. We have to think differently about success in this space. If we want community banks to succeed, if we want consumers to have access to responsible products, you have to engage with industry and make that happen. Everybody watches King of the Hill, right? Everybody's seen King of the Hill. Well, at the beginning of King of the Hill, Boomhauer's working on his Camaro, and all the other guys are standing back watching Boomhauer work on his Camaro and complaining about how he's working on his Camaro. We need to get our hands dirty. We've got to get in the engine if we want this to work well. You can't just stand back and hope that it works out. This is where standards, I think, have a clear role. And you don't have to pick winners and losers. If you make it a voluntary regime with certification on the other side, regulators can nudge and incentivize industry to comply with the standard without mandating and picking winners and losers. To me, that's the beauty of a voluntary standard-setting organization with certification, is you build that trust, you give everybody the option to swim in the same direction, and that's what we're missing. And regulators have just been afraid, I think, of that perspective. It's a new world for them. It's something that, honestly, governments have done for forever. They don't have any problem when it's Basel that's drafting the standards and participating in that organization. It's a standard-setting organization. Well, why can't we do it with third-party partnerships and technology?
But Basel's a great example of this. How long did it take to actually develop Basel?
I can't speak to the Europeans, Jason. Yeah. I think our American private sector can move faster than Basel.
And I agree with the public-private partnership, right? I am in favor of that. I would also like to see something that's achievable in a shorter fashion, right? And let's face it, and I know you and I have sparred on this. This is why Melissa's the buffer, because I'm going to trigger Brandon, is when you have a tri-federal agency and an overlay of states, it gets overly complex. And when we're looking to do this, I think part of what we're arguing, this might feel like splitting hairs, is if we can start with standardizing process and even agreeing on nomenclature and what it is in terms of like how we're approaching it, because to look at the complexity of the types of relationships, the strengths of the banks, because I'll I've met banks that are actually small community banks that are actually much more adept than some of the biggest banks because they've resourced it and they've got time and grade where they've really been spending it and doing it, right? Like just because they're small doesn't mean they're not great at it.
Yep.
They're highly specialized. But when you look at that diversity and complexity, the baby step to me is how do we actually get there? And I don't know that if we try and eat the elephant in one bite, it actually improves the speed with which we can innovate. It actually might create regulatory capture. We saw this when I was working on a regulatory sandbox for the state of Illinois. Turns out the only people that really could comply with the standard of the sandbox were the ones that actually were already large and incumbent and frankly put their finger on the scale of what the standard was going to be. And I think, there's some folks dealing with open banking and FTX around here who I think would also speak to that.
Yeah, that's why, by the way, that's why you have to make it voluntary.
Yeah.
If banks want to go another direction, if a fintech wants to go off standard, that should be fine. But the burdens associated with that are going to have to increase from a regulatory perspective. But also, that's why in your governance model, you have to make sure fintechs are at the table, banks of all sizes are at the table, consumer groups are at the table, regulators are at the table. If you build that governance process in a way that gets everybody engaged, you can address some of those concerns. And if you let the private sector choose what's most important, instead of the regulators deciding where the standard setting go or how we start chipping away at that ocean of challenge, if you let the private sector decide and start regulating or start building those standards, and the regulators are basically standing behind, watching how it develops, and making choices about what standards they'll accept and what they won't, I think you can get to a model that's workable.
Well, I wanted to ask quickly if there were any examples of this working right now. I mean, we mentioned FDX, and I think they're a very telling example because you can look at FDX from the perspective of, well, we now have a technical standard for open banking, so that's a success. But you could also look at FDX as it has come under a lot of criticism for governance. Is it have the right composition of members? Is it being steered the right way? Does it have credibility with regulators? Do we think FDX is a success story to kind of build on? Do we think they weren't ambitious enough, too ambitious? Like, where do we sort of draw the line when we think about the role standards can and should play realistically, especially to Brandon's point when you're bringing so many different stakeholders to the table? Anyone have any FDX hot takes on that?
I don't want to weigh in on FDX, but I do think another component and value of the standards in the first place, I mean, you talk about onboarding, we effectively do have regulations that define what is acceptable in terms of are you who you say you are? And that's essentially a standard. And in some ways, there's a moat that gets created around entities that use it. Yet the innovators, through lots of data, through online information, can actually likely be doing onboarding more efficiently. Not to negate your point, like it's a high-risk area. If we could build more of these standards capabilities, I think it would also have the advantages of bringing that evolution to the regulatory expectations. What the rules are. Getting away from name, address, and government-issued ID would be tremendous for fraud mitigation, for just basic ID verification. So I'm not going to weigh in on FTX.
No, that's fair.
But I think it cuts the cost of uncertainty in the space. It cuts the cost of regulatory, operational, technological uncertainty in the space, and it gives opportunities. To me, that's the trick, is if you're an institution and you're looking at all these burdens, can we lower that cost a little bit? Not every institution is going to innovate. Not every institution wants to go the third-party route. But if we can make it easier for them to innovate, and particularly for community banks who we say we're concerned about living and thriving and surviving, like how can we help them innovate? To me, that is the key. And oh, by the way, I'll add one more thing in this space. Regulatory standards developed by the private sector and given provenance by the regulators with a certification entity give regulators something they just don't have in the fintech space right now: visibility, transparency. We are never going to, even if we have the authority from a third-party service provider standpoint, regulators don't have the resources to examine all these institutions. A voluntary certification built the standards that the regulators approved, could help give that transparency and visibility for regulators into the space.
And this is really what we're trying to do at CFES. We're a coalition. We're not a formal entity with, but the conversations are exactly what we're trying to do. So if you look on our website, you'll see core operating standards. You'll see the lending standards that we released today. You'll see a sample certification report so you understand what it looks like for fintech to get assessed. And it's exactly what Brandon said. They're force multipliers for examiners. Now you start from, instead of going from 0 to 10, you go from 8 to 10. And each bank can have their own bells and whistles on top of it. And the hope here is that we can iterate this, but we wanted to show what the art of possible is. You can't boil the ocean, but we can start somewhere, which is basic partnership banking requirements, a lending module on top of it. We're letting industry tell us what they want. The next one will be payments. When it comes to the art of what is possible within financial services, there's so much left to build that I think that these standards and the organizations, I hope what we can do and solve the problems around are going to be really important. And I think it's exactly what Acting Chairman Hill said before, is you need consistency, right? At the state level, at the federal level, between the agencies. And as an industry, you all can make a difference, because when you go in with AFC and you talk to the Prudentials, you talk to members on the Hill, you say, we need public-private partnership, that's going to get them focused. Tell your fintechs, we need you to get certified against these standards. And we can keep asking regulators, and they're very well aware of the work that we're doing, for more public affirmation of this and permission, but you can also start to make a difference by changing the practice. And so when an examiner walks in and you give them a report, I don't want to, you can say this better than I can, but I really hope that it helps the examiner breathe a little bit more easily, because they know that there's been a specialized independent auditor in here and that a report is prepared for them in a way that they understand. So that's really the vision of what we're trying to build. It aligns very closely with what Brandon's talking about, and I'm hopeful that this is the time to do it.
Yeah, I think that's a great note to end on. The timer up here has reset a couple of times, but I think we are actually out of time. Please join me in thanking our panelists.
Thank you.